Welcome to the deep dive. We're here to, cut through the noise and focus on what really matters. Today we are plunging into Bitcoin, specifically some really big recent shifts, things that are changing its role in personal wealth, corporate moves, even maybe national assets. We've got a bunch of recent news clips, reports, focusing on three main headlines that, well, they tell quite a story together. Our mission. Let's unpack all this, figure out what's actually important for, your financial world, and maybe find some surprising things about Bitcoin's journey. It seems to be moving from niche to something foundational. So, yeah, let's get into it.
Indeed. And you're right. These aren't just random news flashes. Looking at them together, you really see this picture emerging. Bitcoin's integration into the mainstream is accelerating much faster than I think many people expected even a couple of years back. It's a big shift. And it definitely raises some fundamental questions about digital assets and maybe even the future of money itself.
Absolutely. So let's dive into that first big headline. This one feels pretty huge for a lot of Americans. The U.S. government has basically given the green light for Bitcoin in 401k retirement accounts. Now, for our listeners elsewhere, 401ks are these employer-sponsored retirement savings plans. They're a really central part of long-term saving in the U.S. And the market, wow, it reacted instantly. Bitcoin surged past $124,000, a new all-time high, almost right after the news broke. And this isn't small potatoes. It potentially affects, over 90 million Americans? But thinking about the average person looking at their retirement savings, are there unforeseen implications here? Is it all positive, or are there maybe hidden risks, hidden complexities we should be thinking about beyond just that exciting price jump?
That is a really crucial question because the main insight here isn't just the sheer potential amount of money involved. I mean, analysts are talking maybe over $1 trillion flowing into crypto eventually from this, $1 trillion. But the deeper thing is how this subtly starts to redefine what a safe retirement investment even looks like for millions of people. Traditionally, right, retirement funds are all about stability, long-term preservation, steady growth. Introducing Bitcoin, which we all know can be volatile, it forces everyone, regulators, individuals to adapt. They have to get comfortable with an asset class they might have been really skeptical about before, maybe even hostile towards. It kind of challenges that old wisdom, pushing Bitcoin more into the realm of, dare I say, legitimate long-term assets for the average person. So the whole risk assessment conversation, it just got a lot more dynamic, hasn't it?
Yeah. That shift, putting it right into individual retirement accounts, it's profound. Amazing how fast perception is changing. But it's not just personal portfolios, right? Corporations are also rethinking things. Big time. Which brings us nicely to our second headline. This one's about corporate strategy, specifically an American company with pretty big international plans. We're talking about American Bitcoin. And it's notable, they're backed by Donald Trump Jr. and Eric Trump. Their goal seems quite aggressive. They want to acquire publicly listed companies in Japan and possibly Hong Kong too. And the objective, build up a large strategic Bitcoin reserve, basically copy Michael Saylor's crypto treasury model. And they plan to go public in the US via a reverse merger this September, which for anyone unfamiliar is like a faster track to being listed on the stock exchange. But why this specific strategy? Buying other companies to build a Bitcoin stash? Is it just an accounting move, or is there something deeper going on with corporate finance here?
Well, it's fascinating because it really takes that crypto treasury idea, the one MicroStrategy pioneered, and pushes it further. It's not just about a company parking its spare cash in Bitcoin as, say, an inflation hedge. That's become more common. Here, American Bitcoin is explicitly buying other public firms to build up their Bitcoin holdings. The deeper insight, I think, is that companies like this are positioning themselves almost as well as Bitcoin holding companies. Their core business sort of becomes leveraging Bitcoin's potential appreciation to create shareholder value. It blurs the lines, doesn't it, between a regular company, an investment fund, maybe an asset manager, this kind of aggressive acquisition strategy. It signals a very, very bullish long-term view on Bitcoin, not just as a speculation, but as a core active part of the company's financial engine, using its potential growth directly for shareholder returns. But of course, it also means their own company value gets tied very tightly to Bitcoin's price swings, which is, a unique risk for a public company.
Right, a powerful signal, like you said, but definitely introduces new risks tied to that volatility. Okay, so we've got individuals potentially holding Bitcoin for retirement, corporations making it central to their treasury, even their M&A strategy. But what about the government, the ultimate rule setter? Their stance influences everything. So let's look at our third headline. This concerns the U.S. government's position, which seems, nuanced. The U.S. Treasury Secretary, Scott Bessent, he recently clarified things. He said the government is not currently planning to acquire more Bitcoin. Okay. But, and this is the really interesting part, he stressed the government is still open to getting Bitcoin through budget-neutral pathways. This came after some earlier comments caused a bit of confusion about where the administration stood on crypto. So, expert, what does budget neutral really mean in this context? Is it just fancy footwork, a polite no for now, or does it genuinely leave a significant door open?
Yes, it's a bit of a masterclass in careful wording, isn't it? Budget neutral pathways. It's significant precisely because it's not a hard no. It suggests a pragmatic approach, maybe even an innovative one. It means the government isn't totally ruling out getting more Bitcoin down the line. But any new holdings probably wouldn't come from direct spending, not from taxpayer budget allocations. Think more like assets seized from criminal investigations. That's a big one. Or perhaps even donations or exchanges that don't involve direct government outlay. It basically creates these potential routes for the government to manage or acquire digital assets without needing a specific budget line for it. And it might even hint at future policies where digital assets get integrated into broader government finance or strategy, just not through direct purchase. So yeah, it's cautious, definitely. But it's also undeniably open-minded. It acknowledges Bitcoin's existence and potential usefulness without committing tax dollars right now. It means Bitcoin could still end up as a government-held asset, just arriving through these side doors, so to speak.
Interesting. Side doors. Okay, so we've covered quite a bit. Bitcoin stepping into 401ks, changing personal retirement strategy, then corporations adopting it not just as a reserve, but as a core part of their M&A and value creation strategy. That's a big leap. And finally, the U.S. government taking this nuanced but still open stance on acquisition via these budget-neutral means. Hints of a future role there, too? These feel like three really distinct areas, but they're all interconnected, aren't they? And they're fundamentally changing how Bitcoin is seen and used.
Absolutely. And that brings us to a final thought for you, the listener, to maybe chew on. Given all this Bitcoin entering traditional retirement plans, big companies building strategies around acquiring it, a major government keeping the door open to holding it, what does all this, taken together, suggest about Bitcoin's future stability, its integration into the global financial system? And maybe more profoundly, what new questions does this raise about its potential role as a fundamental asset, something almost normal, perhaps even essential in the financial landscape that's evolving right now? Something to think about.